So how much money do I need to live off dividends? Well, the answer to that is not as simple as you might think. There are a lot of factors that you need to take into consideration. The amount of money you need to live off dividends depends on your desired lifestyle and the dividend yield of your investments. By the end of this video, you'll know the type of dividends that you should put your money into and the amount to actually invest. Hello there, welcome back to my channel. I have another exciting video in store for you. But before we dive into that, if you're new here, make sure to hit that subscribe button and the notification bell so you don't miss out on any of our future videos. We release new content regularly, covering topics like personal finance, money management, and economics. Alright then, let's jump right into today's video. So that I don't waste any time, I just have to tell you straight up. To make enough dividends to be able to live off of, you're gonna need a lot of money. But don't worry, we're gonna use the power of time and compounding interest. Here's a general outline of how you can estimate the amount. You need to start by determining your annual expenses. First, calculate the total amount of money you spend on expenses every year, including housing costs, food, transportation, healthcare, entertainment, and any other regular expenses you expect to have in a year. Be as detailed and accurate as possible to get a realistic figure. You could inflate this figure just a little bit so that you have enough wiggle room. Most dividends pay yearly and quarterly. That's why you need to know your total expenses for the year. In the end, I'll focus on the monthly dividends, which are actually my favorite type. After that, you'll need to consider your desired income. Decide on the amount of income you want to generate from dividends annually. This should match or exceed your calculated annual expenses to cover your living costs entirely. Then you should do research on different dividend-paying stocks or funds to get an idea of their average dividend yield. The dividend yield is the annual dividend payment divided by the stock's current price, expressed as a percentage. You should calculate the required investment that you need to make. Once you have your desired annual income from dividends and an estimated average dividend yield, divide your desired income by the average dividend yield percentage. For example, if you want $30,000 per year in dividends and the average dividend yield is 3%, you would need to invest $1 million, which is $30,000 divided by 0.03 to generate that income. You see, $1 million is quite a lot. But just as I indicated at the beginning of this video, we're going to use compound interest. Whenever you get paid, take that money and use it to buy even more stocks. With time, you will be creating a snowball as you'll be receiving more dividends and buying even more stock. It's also very essential to remember that the stock market can be volatile and dividend yields may fluctuate over time. Let's look at monthly dividends, which are actually my favorite. For this, I don't only invest in companies based in the United States, I also look at companies abroad and others based in the emerging markets. Monthly income dividend stocks are stocks of companies that pay dividends on a monthly basis instead of the more common quarterly or annual schedule. These stocks are particularly attractive to income-seeking investors who prefer a regular and frequent stream of income. Most dividend-paying companies distribute dividends on a quarterly basis, meaning they pay dividends to their shareholders 4 times a year. However, some companies, especially real estate investment trusts, also called REITs, and certain income-focused funds, have structured their dividend payment schedules to be monthly. Monthly income dividend stocks can be appealing to investors who rely on dividend income to cover their living expenses, as it provides a more consistent cash flow throughout the year. Instead of waiting 3 months for the next dividend payment, investors can receive dividends every month, allowing for more predictable budgeting and financial planning. Investors should keep in mind that while monthly dividends can offer more frequent income, the overall yield and stability of the investment are still essential factors to consider. You need to look for a stable company with good growth potential for you to know that you have your money in a good place. A high dividend yield that is unsustainable or comes from an unstable company may not be a reliable source of income in the long run. As with any investment, it's crucial to research and evaluate the financial health and performance of the company or fund issuing monthly dividends. Diversification across various sectors and assets can also help mitigate risks associated with individual stocks and maintain a more balanced income portfolio. As always, seeking advice from a financial advisor is recommended to align your investment choices with your specific financial goals and risk tolerance. I love getting dividend income from REITs. So let's look at some of them. The best REITs for dividend income can vary over time and depend on various market conditions. However, here are some well-established REITs that have historically been known for their dividend-paying track record. Please note that it's essential to conduct your own research and consider your specific investment goals and risk tolerance before making any investment decisions. Number 1. Public storage, also called PSA. As one of the largest self-storage REITs, Public Storage has a stable income stream from its rental properties. The demand for self-storage units tends to be less cyclical than other real estate sectors, making PSA relatively resilient. Number 2, we have Ventas Incorporated, VTR. Ventas is a healthcare REIT with a diverse portfolio of healthcare-related properties, including senior housing, medical offices, and hospitals. Healthcare real estate can offer attractive long-term prospects for income investors. Number 3, Welltower Incorporated. Similar to Ventas, Welltower is another healthcare-focused REIT with a focus on senior housing and healthcare properties. The aging population trend has supported the demand for senior housing, contributing to the company's dividend stability. Number 4, Realty Income Corporation. Often referred to as the monthly dividend company, Realty Income is one of the most well-known and reliable dividend-paying REITs. They have a long history of paying monthly dividends and have a diverse portfolio of retail properties. Number 5, Simon Property Group, SPG. As one of the largest retail REITs, Simon Property Group owns and operates a wide range of shopping malls and outlet centers. Despite challenges in the retail sector, SPG has been known for its consistent dividends. Number 6, Prologis Incorporated, PLD. Prologis is a leading industrial REIT with a focus on logistics and distribution centers. Given the growth in e-commerce and the demand for warehousing and distribution space, Prologis has performed well as a dividend-paying REIT. Remember that past performance does not guarantee future results, and the performance of REITs can be influenced by various factors, including changes in interest rates, real estate market conditions, and economic trends. It's crucial to conduct thorough research. You should diversify your dividend investments to reduce risk and avoid relying solely on a few individual stocks. Moreover, living solely off dividends may not be feasible for everyone, as it requires a significant amount of capital and comes with investment risks. Many people combine dividend income with other sources of income, such as retirement savings, social security, or part-time work, to ensure a more stable financial situation during retirement or financial independence. That's all I got for you today. Thanks for watching this far. I hope you enjoyed the video. Don't forget to hit that like button if you find this video helpful, and if you have any questions or suggestions, also leave them in the comments section below. We love hearing from you. Goodbye.